Hello there, you're watching Market Cafe on ET Now. This is Priyanka Uppal along with me, Shriyansi. After Indian markets hit a record high, it was a record session for US markets also. Both S&P and Dow hit record high. In fact, Nasdaq is just 4% away from its record high. Let's see what's in store for the show today. We have all the stocks, buzzing stocks on the show for you. We set you for the trading day today. So let's get started. Shriyansi, morning.
Well, absolutely. Good morning, Priyanka. Let's take a very quick look at the US markets then. And when you take a look at the US markets, the moves, of course, that you see are that the S&P 500 and the Dow closed at record highs after gaining just 0.3% as well as 0.2% respectively. When you take a look at Nasdaq also, you're looking at gains coming in of about 0.6%. And the Nasdaq is also less than 4% from its record high. So those are the kind of levels, the kind of elevated levels that you're looking at. When you take a look at Nasdaq as well, all three averages on track for a positive September as well, even though you do have fears of a slowing economy still sort of linger after last week's rate cut coming in, that bumper rate cut coming in rather from Federal Reserve as well. Now that the central bank has of course begun to lower interest rates, the economy is also becoming a bigger focus for investors. And on the back of that, we're looking at a whole host of economic data that will be in focus. So I'm talking about new home sales for August, due on Wednesday morning US time, weekly jobless claims due on Thursday as well. And investors will be paying close attention to sort of commentary coming in from companies, especially as earnings season also ramps up early next month. And that is something that we have in focus as well. Lastly, let's take a very quick look at the European markets. And European markets also closed higher after that China's stimulus measures were announced, and that was something that remained in focus also, Priyanka.
Absolutely. In fact, so it looks like a good set of cues from the global market. Talking about the US or the oil also, the crude check. Now the crude is inched back again to $75 per barrel. It's majorly on the back. There are some fears on the Middle East front also, some tension streaming in there. But then more or less oil prices are steady, and now China's stimulus also, the hopes for China's stimulus also fades away. US crude stockpiles fall. In fact, now you remember the crude had fallen to rate levels like $70 per barrel. It was consolidating at lower levels, but now that has inched up a little. But then now the prices look steady at least on Friday after rising the previous session. There were fading excitement for the economic stimulus in China. China has, of course, given us some measures to support its economy. And that's the world's biggest crude importer also. So looks like a steady move coming in from the oil also. Organization of Petroleum Exporting Countries in the World, means OPEC, which has given its outlook report for 2024 and has forecast a robust demand growth for so far ahead as 2050 approaches. The producer group predicts strong energy demand growth of 24% globally between now and 2050. Additionally, it also expects robust medium-term growth in oil scaling, 112.3 million barrels per day in 2029. That's an uptick of nearly 10.1 million barrels per day versus what it was last year. Remember, just earlier this month, the Brent had fallen to below the key levels of $70 per barrel mark. That's the lowest in 33 months.
Well, absolutely. And let's also keep it going with the oil market. Then Organization of Petroleum Exporting Countries in its World Outlook report for 2024 has forecast robust demand growth for as far ahead as 2050. Now, the producer group also predicts strong energy demand growth of 24% globally between now and 2050. Additionally, it also expects robust medium-term growth in oil scaling 112.3 million barrels per day in 2029, and that's an uptick of 10.1 million barrels per day versus last year. Remember, just earlier this month, the Brent also fell below that key $70 per barrel mark, the lowest in 33 months as well. And let's also take a quick look at gold then. And gold prices, when you take a look at them, rose about 1%, hit a record high, building on its recent rally as well as Middle East tensions fed its safe haven appeal, while investors also lashed on to fresh cues for US interest rate cuts as well. When you take a look at price movements, 1.1% uptick is what you're seeing coming in for gold, and this is after hitting a record of $2,654 per ounce. Now, gold has risen about 28% so far in the year, as well as fears of an all-out war in the Middle East also escalated. Now, when you take a look at the billions rally, that has also been propelled by the start of monetary easing by the US Federal Reserve, which also reduces the opportunity cost of holding zero yield gold, and that is something that we're keeping a very close eye on. But keeping it going with the shimmering gains, now major banks expect the yellow metal to extend its record run into next year, largely driven by hefty inflows into exchange traded funds and expectations of additional rate cuts from the global central banks as well. Let's take a look at the forecast. Most brokerages also expect the yellow metal to eye over $2,700 per ounce mark, with JP Morgan also saying that it could scale $2,850 as well.
All right, that's a quick check on the US markets, oil prices and the gold. But then let's get you what is in store for in terms of main cues. In terms of let's talk about the domestic cues first. Today is going to be the day 2 of the GST rate rationalization. But then talking about the US, few of the key economic indicator which has to come in from US is the August new home sales data, which is to be reported, which is due on Wednesday. Thursday also comes up with another economic data point. From the Eurozone, there are going to be ECB's non-monetary policy meet also. But then talking about more cues from the domestic, we are in the second phase of JNK election, which has begun. Expiry, Nifty Bank expiry. Bank Nifty did not move yesterday. In fact, it was a dragger. Let's see how it pans out. Today is the expiry day. And there's a UP International Trade Show in operation.
Well, absolutely lots of cues to keep our eyes on. But among other key headlines this morning, then consumer confidence in the United States had unexpectedly declined for the month of September, largely due to labor market concerns. The data signaling dampening optimism about the economy as the country eyes the key presidential elections. In November, the consumer confidence index fell to a low of 98.7, down from a revised figure of 105.6 last month.
Okay, now shifting focus to some key comments from the US president coming in from Joe Biden. And that was at the United Nations General Assembly. In his fourth and final address to the United Nations, he said that the world is at an inflection point. His word came amid a period when the UN's relevance and legitimacy is being repeatedly called into question due to ongoing geopolitical tensions. He only mentioned Lebanon briefly in his address, which came as fierce cross-border strikes with Israel have left hundreds of people dead. He said, and we quote, "Too many on each side of the Israeli-Lebanon border remain displaced. Full-scale war is not in anyone's interest."
All right, then moving on, an Israeli offensive in Lebanon continues to claim lives. Almost 569 people have died so far, including 50 children and thousands injured. The new offensive against Hezbollah has also stoked fears that nearly a year of conflict between Israel and the militant Palestinian group Hamas in Gaza is escalating and could destabilize West Asia as well. Among key comments, the United Nations Secretary General Antonio Guterres said that Lebanon is at the brink and that people across the globe cannot watch Lebanon turn into another Gaza.
All right, moving on. Sustainability was a dominated theme at the just concluded Arohana by Deloitte. The participants discussed sustainability issues in agriculture, tourism, and many other sectors where a balance with environment and surroundings is necessary, keeping development in mind at the same time. The gathering at Deloitte Arohana also discussed the path towards Viksit Bharat 2047. We caught up with Subhranshu Pathak, who's a partner for GNPS industry leader, Deloitte India, and Ishwaran Subramanian, who's a partner for supply chain leader, Deloitte India. Listen into what exactly they both said.
See, one of the things that we already have a fairly good ambition for, but we're facing headwinds from a global context is how do we raise our exports, right? The ambition to get up to 2 trillion from just exports by 2030 is an ambitious target, but we also have to be cognizant of what's happening globally there and building our own capabilities and capacities, be prepared to take advantage of what's happening globally. That, of course, is one big challenge. Domestically, we are blessed in terms of the domestic consumption demand, which will drive growth significantly.
This summit has been phenomenal in the fact that it has integrated all aspects of the government, as well as how India is progressing forward towards Viksit Bharat. So I think specifically on the semicon perspective, I think the first policy, the 1.0, which is nearly close to exhaustion as what the government has said, focused on creating the manufacturing value chain. Now, what will be the lookout for the second edition of the policy would be two. One, an extension of the fiscal outlay that will be required. but more important also how we can create the larger ecosystem, which would involve, let's say, materials, which would involve chemicals, which would involve equipment. That's point number one. Second, I think would also be, I think a good point for us to consider would be how we can create plug-and-play ecosystems for semicon manufacturing, given that it's a portfolio with a very short technology life cycle. And to that extent, if you can also have master development policies to come in, then anchoring companies into India would be very, very easy for us.
Alright, then time for a quick breather on the show. When we come back, we'll take a look at how the Asian markets are faring, so don't go anywhere.
Welcome back. You're watching Market Cafe on ET Now. This is Priyanka Uppal, and now let's just take a quick look on the Asian markets. Asian markets more or less looks like range bound today. Nikkei is down with the 0.5% of cut, but then broad-based index topics is up, Kospi is up. But then looks like big moves coming in from Hang Seng Index, which the future indicates a 4% of nearly 4% of start. South Korea's Kospi is up nearly 0.5%. Kosdaq is up 0.5%. More cues to come in from Australian market also. They've climbed marginally, rebounding from the 2 straight days of losses. But then real action also happened with the Chinese market yesterday. The way Chinese market yesterday rallied after the central bank announced slew of measures to support the economy. In fact, CSI 300, it recorded its largest one-day gain in over 4 years. And let's quickly take a look at the GIFT Nifty also. More cues to come in, looks like. We are trading with a flat to negative bias right now, but then kind of range bound session coming in. Nikkei is has paired more gains now. In fact, it's just a 0.25% up only, but then more cues to come in from Hang Seng market. Shreyansi.
Well, absolutely. That is just something that we're watching out for in terms of the Asian screen. Now, of course, in terms of where we closed yesterday, what we're currently penciling in is a good start, but let's see how that really pans out for us and let's see how that works out for us. But we do have a power pack lineup for you on the market at 9:20. We'd be in conversation with Ashish Gupta, CIO at Axis MF, and also to talk to us about the F&O charges that have been revised. We'd be in conversation with Rishi Nathani, Chief Business Officer at MCX, and to discuss the commodity upcycle and whether that can sustain. Catch us in conversation with Rakesh Arora, founder at Go India Stocks at 9:50 a.m. as well. And to talk about the growth roadmap for the company, Ravi Vishwanathan, Managing Director of TVS Supply Chain, will be in conversation with us come 10 a.m. And caution amid SME IPO rush is also something that we're going to be discussing with Mohit Gulati, CIO and Managing Partner at ITI Growth Opportunities Fund. At 10:20 then, Sunil Subramaniam, market expert, will be in conversation about the market as well. So keep an eye on all of those interesting conversations. Alright, so that's a power pack lineup for you right there, but
back. You're watching Market Cafe, and now some merger details trickling in for GSPL and Gujarat Gas. GSPL shareholders are set to get 10 shares of Gujarat Gas for every 13 held. The analysts have a positive view on the merger due to the simple structure and the EPS upside. Somit joins in with more details. Somit, is it the same part of the restructuring which was announced just a few days back? Tell us more details about it.
Well, a mega merger among the Gujarat-based gas companies was announced in the start of the month. Now, as per the merger agreement, GSPL is supposed to be merged with Gujarat Gas, and the share swap ratio decided for this is that GSPL shareholders will get 10 shares of Gujarat Gas for every 13 that they are currently holding in GSPL. Now, when the merger was announced, GSPL shares were valued at a premium of nearly 5%, which means that if you would have purchased 13 shares of GSPL at that time, then post completion of the merger, the value of the 10 shares that you would have got in Gujarat Gas would have been valued at a premium of nearly 5% based on the share swap ratio and Gujarat Gas share prices. However, given the recent weakness that we have seen in the PSU shares, GSPL share prices have fallen by nearly 9%, while that of Gujarat Gas have largely remained stable. Now, owing to this, the arbitrage between GSPL and Gujarat Gas has has increased to nearly 17 odd %. This means that if anyone purchases Gujarat GSPL shares, 13 shares of GSPL, they will be valued at close to now 5,244 rupees, while the 10 shares of Gujarat Gas will be valued at close to 6,126 rupees. That is nearly 17% higher. However, the catch here is that one needs to hold the GSPL shares until and unless the record date for this merger is announced, and the shares of Gujarat Gas will be credited to that individual's account only post the completion of this merger. Now, what we understand is that this merger is expected to complete by nearly August 2025. Now, assuming that the share prices of both these companies remain largely stable, this will mean that one could get a return of nearly 17% by holding GSPL shares over the next 1 year. Now, analysts viewed this merger quite positive given the fact that the structure was getting simpler and there was EPS upside on the back of merger synergies. In fact, Morgan Stanley said that the merger of Gujarat Gas and GSPC and GSPL could lead to a 70% upside on the EPS front for Gujarat Gas and a 20% increase in the net asset value. However, there are two key risks when it comes to this arbitrage. Firstly, if there is a delay in the completion of the merger, and second big risk is that if there is a further fall in the share prices of GSPL and Gujarat Gas, then these gains of 17% could be far lower for any shareholder.
Alright, thanks Amit for that update coming in on GSPL and Gujarat Gas merger. Moving on then, according to 18 Hour sources, SEBI has approved Swiggy's confidential IPO filing. The IPO launch is expected to be in November. Ankur Mishra is standing by with more details. Ankur, tell us what's in the card for Swiggy.
Yes, what we have learned through sources is that market regulator SEBI has given go-ahead to Swiggy's pre-filing of IPO. Now, this was a confidential filing. What is confidential filing? It allows company to have a filing with the regulator without disclosing the details to public as well as competitors. That was started in 2022, whereby now Swiggy has taken this route. Now, what it means, after this, DRHP will be filed, in which the details will be disclosed to the public, and after 21 days we can expect the final RHP, meaning the red herring prospectus from the company, where the final size of the IPO will be decided along with the price band. So, all in all, what we can expect, it will take at least a month for the company to come out with final approval on the IPO. But for now, SEBI has cleared this pre-filing. This means the step 2, that is DRHP, will be available next by the company, and after that in November we may see that final IPO may be launched by Swiggy.
All right, thanks very much. So, Swiggy files IPO on a confidential route. All right, moving on. Let's get you more news, and that's the news coming in. The government has now extended the import policy for laptops and tablets. Now the permits will be functional till this year ends, and fresh licenses will be required from next year only. Sumita is here with more details on this. Sumita, over to you.
While India has extended its policy to monitor laptop imports till December 31st, permits will be functional till that time period, and then new permits will be issued in the beginning of next year, that is in January 2025. And this is according to a notification that has been issued by the Directorate General of Foreign Trade, or DGFT. Like I said, fresh authorizations will be needed from January, and those will be subject to detailed guidance that will be provided shortly to the industry. Remember, India notified these import restrictions on laptops and tablets, all-in-one personal computers, ultra-small form factor computers, and of course servers in August 2023. That was last year, and the government mandated the importers of these products to actually apply for licenses from the government for future consignments of laptops and tablets. Why was this step taken? Well, this was taken to curb costly imports from China and boost domestic production in India. The government has already encouraged domestic production of IT hardware under the Make in India initiative. There is a PLI scheme as well that plans to replicate the success that the country has achieved in smartphone manufacturing and assembly to this sector now. Now, this move is very significant, coming in as it does just in time for the festive season. We are already in the midst of festive season, but this is coming in ahead of these big sale days, ahead of Diwali. So there is that kind of relief coming in for these electronics companies and suppliers of these equipments, considering that there will not be any disruptions during the festive season.
All right, thanks Sumita for that update coming in. Moving on, then a week after the Supreme Court verdict on AGR dues, telecom companies yesterday met Union Telecom Minister Jyotiraditya Scindia. The meeting also included discussions on AGR dues calculation. In fact, Aishwarya Patil is standing by with more details. Aishwarya, what else made it to the agenda of the meeting then?
We're learning from our sources that some of the telecom operators and head of the companies, what we've been given to understand is Rajan Bharti Mittal, the Vice Chairman of Bharti Enterprises, also Akash Ambani, the Chairman of Reliance Jio Infocom, Vodafone Idea CEO as well, Akshay Mundra, were part of the meeting that was held with Telecom Minister Scindia this afternoon. And of course, the big pressure on the telecom operators at this point is the payment of AGR dues to the Department of Telecommunications, and that is the matter at hand that may have been discussed between the Telecom Ministry as well as telecom operators, is what we have been given to understand. As far as a little bit of context on this particular case, back in 2019 the case was first filed by the telcos, and the Department of Telecommunications claimed that they owed about over 1,47,000 crore rupees in licensing fees as well as spectrum usage charges. If we go by the previous estimates that DOT had put across for AGR dues by the telcos, Airtel owed about 43,980 crores in AGR dues. Vodafone Idea over 58,000 crore rupees, and other players such as Tata Teleservices were also the party in this particular case. We also have Reliance Telecom and a few other players such as BSNL and MTNL. All of them included is what the Department of Telecommunications says owed about $1 trillion in AGR dues to the Department of Telecommunications. So fears mounting. It seems like it's going to be a tough battle for recomputation of the AGR dues as far as telcos such as Bharti, Airtel, Vodafone Idea are concerned. Back to you.
All right, the road looks far away, Aishwarya. Thanks very much for the update. Keep an eye on the entire matter. We will stay in touch for more updates on that. Moving on, as a Samsung workers' protest enters its third week, Samsung India has defended its wages. The company shares that the monthly salaries of their full-time staff at the Tamil Nadu plant is 1.8 times the industry average. Sameer Dikshit filed this report earlier. Let's listen in the important details that he's filed.
Making another move to resolve the ongoing issue and also to get thousands of workers, those who are protesting, back to the manufacturing site. Samsung has said that the firm is ready to engage with the workers to address their grievances. For the first time, the South Korean electronic manufacturing giant Samsung has made a statement related to the salary structure of the employees. Samsung in its official statement has mentioned that the average monthly salary of a full-time employee is 1.8 times the average salary of similar workers, those who are employed at the nearby area. Not just this, Samsung has also mentioned that workers are eligible for overtime pay and also they are eligible for other allowances. Samsung has mentioned that the firm is committed and is providing better working environment and has assured that not just in terms of working environment, but the safety concern that has also been addressed by Samsung, the health, safety and welfare, these all aspects are being taken account by Samsung. So Samsung is constantly making a move to resolve the issue. The protest which has entered in the third week from September 9 till now, the thousands of workers, they are protesting near Chennai against Samsung, demanding better working environment, demanding better salary structure and also a recognized worker union which is backed by CITU. So that's a major demand by the protesting workers. But Samsung, they are now, earlier they even issued show cause notice, mentioned that if the workers, they will not come back to the work, then their salary will be deducted. So these sort of steps are being taken up by Samsung so that the issue is being addressed. But now Samsung has made a bold statement that they are ready to engage with the workers so as to early resolve the issue and get the thousands of workers back to the manufacturing site.
All right, thanks Ami for that lowdown on what Samsung is really doing to quell all of those protests. But moving on, some relief might be in store for Mumbaikas because the MMRDA has announced its 5-year plan to decongest the roads of Mumbai with a budget of also 58,000 crore rupees. What really is the project and how is it going to work? Astha Chopra is standing by with those important details. Astha?
Well, after all the mega infrastructure projects of Mumbai, such as Sea-Link, coastal roads and Mumbai Metro, well, another mega project is under the pipeline for our next 5 years. We are talking about the Ring Road Master Plan. Well, all the recent updates, infrastructure updates are just a glimpse. But on the next, what we have is a big infrastructure project, that is the Ring Road Master Plan. Now, what is this Ring Road Master Plan? It is the connectivity across the length and breadth of the Mumbai metropolitan region, which is the MMR. It will connect from Vadodara, Gujarat border up to north to Alibag in the Konkan and the belt of Maharashtra down the south towards Navi Mumbai. Well, it will connect south to north and east to west. Like all the borders will be crossed in this connectivity of roads. Now it will connect to Vadodara till Navi Mumbai, including all the cities in between. Now this flyovers, this network of roads will constitute of flyovers, coastal roads, bridges and underwater tunnels, which will aim to reduce the time and the traffic as well. Now what is likely to happen? Now the MMRDA, which is the Planning Authority of Mumbai Infrastructure Project, has already approved an additional 90.18 kilometers of road network, which will be the estimated cost of under 58,517 crore rupees. Now it has already been approved by the MMRDA and they are still working on it. Now there are a number of tenders going on here and then, and many of the authorities are also a part of this initiative. The infrastructure project, which comprises of MMRDA, MMR and also BMC is also part of it. Now this will ensure a signal-free or minimal interruption of travel for the people, as it connects all the 4 directions. The passengers can easily travel from north to south and east to west, which is the main traffic prone areas. It will be reduced and it's a huge landmass connectivity proper, and it will be the best infrastructure projects for the Mumbaikars, as it will reduce the time and the travel costs.
Wow, thanks very much, Astha, for all the detail. Looks like a mega plan in store. Of course, the entire infrastructure for Mumbai is changing and big relief coming in, at least with the Metro 3 project, which just started, and more to come in 5 years, not just within the city, outside the city also. Thanks very much, Astha, for all those details on that. Now, let's look at Piramal Pharma's investor presentation, where the company has released its roadmap to see itself among the top 10 companies in the addressable market size. Varun is here with all the highlights on this. Varun, investors are really curious to know more about the Piramal Pharma investor presentation. Tell us what were the highlights.
Definitely. So during the investor day, they have set the goals for 2030 and the goals are really very nice. If you look at the goals set by the company wants to be among the 10 top companies in addressable market, and actually the company wants to be a $2 billion company with EBITDA margins of around 25%. May I tell you that currently if you look, the EBITDA margins of the company are around 17%. So you can see exponential growth in EBITDA margins going from here. Also the company wants to double its revenues and the EBITDA would grow by around 3 times. Now in the $2 billion company, $1.2 billion would be contributed from the CDMO business, which is actually growing very well, and they expect it to grow good in the near future also. So that 50%, more than 50% is going to be contributed from the CDMO business. The CHG business would contribute around $600 million. ICH business would contribute around $200 million. In the ICH business, the company wants to build many power brands in the range of 100 crores to 500 crores. And if you look in previous quarter, the e-commerce business was actually helping the ICH business to grow, and the company aims to scale up the e-commerce business, so leading to a better growth in the ICH business. Also, the company wants to, reduce the leverage on the balance sheet, and they are aiming for a net debt to EBITDA of around 1 times. Currently, the net debt to EBITDA stands at around 3 times. So there would be an exponential reduction in overall net debt to EBITDA. Also, the profit margins are going to be in early teens, and the ROC, the company aims to be in the high teens, whereas it is at very low currently. So the goals for 2030 have been set by Piramal Pharma, and the company wants to be a $2 billion company.
Thanks, Varun, for all of that update coming in on Piramal Pharma's investor presentation. So that's the latest there. But time for a quick breather. When we come back, we'll take a look at the stocks that you should keep on your radar. So don't go anywhere.
Welcome back. You're watching Market Cafe, and now time for a quick check on the stocks that could be buzzing in the trade today. Jine joins in with a host of stocks on the back of news. Jine, over to you.
Well, yes, so if we talk about stocks that will be in focus, first up is IRCTC and Indigo. Both the companies have partnered up to offer airfare discounts. The IRCTC will be offering about 12% discounts on Indigo, both domestic as well as international flights booked via their platform. Moving on, KEC International will be in focus as reports suggest that they have approved a QIP worth about 4,500 crores with an issue price of 976.64 rupees per share. Moving on, agencies report that NMDC, the iron ore output grew about 10% in FY24, whereas the sales grew about 16% in FY24. Moving on, Mazagon Dock Shipbuilders will be in focus as company has commenced production for their first multi-purpose vehicle for merchant navy in Denmark. Moving on, lastly, Delta Corp will be in focus as company has approved demerger of its hospitality business and real estate business. The approved scheme of arrangement is between company and Delta Penland.
For that list of stocks that will remain in focus on account of news flow, we also have Gaurav who's standing by with the list of counters that make it a brokerage radar bright and early this morning. Gaurav?
Well, yes. Let's begin the list with BEL, and this stock is in focus because Macquarie has now maintained its outperform rating and a target price of 350 rupees on this counter. What they say is that company is on track to achieve FY25 order book target that they have given. When we talk about order inflow, at least YTD order inflow looks like a lagging so far, but they say that it won't be much of a concern because company can achieve order book in H2 FY25. Apart from that, they also say that the backlog of orders can actually support the growth for the company, and as a result, they are being bullish on this counter. Next up we have is Power Grid, where Goldman Sachs has maintained buy rating and a target price of 370 rupees per share. What they say is that the government has now upgraded the transmission capex estimates almost to $110 billion, and this is actually going to give a big push to company. They say that 8% of the transformational capacity CAGR can be seen in the company, and at the same time they are also expecting Power Grid to be biggest beneficiary when we talk about $500 billion plus of the plan which is there for FY24 to FY50. Apart from that, let's also watch out for NTPC, and this is on the back of the NTPC Green Energy's IPO. Now Goldman Sachs has maintained buy rating and a target price of 430 rupees on this counter. What they say is that they are actually valuing NTPC at a value of around 4,170 billion rupees, and within this the value of NTPC Green is valued at around 784 billion. What they say is that the 100 billion of the primary issuance that we have seen can actually represent around 13% dilution for NTPC, and as a result they are being a little bullish on NTPC right now, giving a target price of 430 rupees. So definitely watching out on all these counters on the back of the brokerage note that we have received today.
Right, thanks very much, Gaurav, highlighting all those stocks which are on the brokerage radar today. Moving on, South Korean auto giant Hyundai Motors Indian arm is one step closer to launching its proposed IPO worth $3 billion. With the SEBI giving the go-ahead for the mega issue, the IPO will be a complete offer for sale by the parent company. Srishti joins in with more details on that. Srishti, the competition of course intensifies.
Well, certainly the competition seems to be intensifying in the passenger vehicle space as in the latest Hyundai Motors has got the SEBI's nod for the IPO as per reports, and this is going to be really interesting because this is expected to be one of the biggest IPOs for Indian markets, with the size expected to be at 25,000 crores as per report. And they also highlight that this particular IPO is coming in at a valuation of $22 to $28 billion. Along with that, as we know that as per DRHP, this will be a completely offer for sale, where the parent Hyundai Motor Company will sell around 14.2 crores of equity share. That's approximately 17.5% of their equity share capital in this particular IPO. As we know that Hyundai Motor India is the second largest in terms of the market share for Indian markets after Maruti Suzuki, and they have been really aggressive in the recent while in terms of the launches as well. But when we do the peer comparison, as per the passenger vehicle market share, as well as the valuation that is expected to be from 1.8 to 2.3 lakh crores, and comparing it with the likes of Maruti Suzuki as well as M&M, we do understand that there is indeed a valuation gap of around 12%, that is headroom available for Maruti Suzuki, while for M&M, given the kind of run-up that the stock is very near to its all-time high, there doesn't suggest that as per the forward valuation and doing the analysis on EV by EBITDA multiple for FY26, we don't see that there is much headroom in terms of the valuation gap when comparing it with M&M. But yes, there is some valuation gap with respect to Maruti Suzuki. But when this IPO comes, that will be really interesting one, because after 2 decades we are going to see an auto major coming out with such a big size IPO, and all eyes on that.
Well, absolutely, Srishti. All eyes on that mega IPO, and we're all gearing up for it. But moving on, then MCX will be in focus on the back of that Morgan Stanley note, where they've reiterated an underweight stance on the stock with a target price of 2,950 rupees. Let's also go across to Sharad, who's standing by with more details. Sharad, what really is Morgan Stanley saying, and what is their rationale there?
Well, for MCX, there are new charges coming in from 1st October, and they are moving into the slab-based charges. Earlier it was there, so they are now cancelling that, and now they are going into fixed base charging. Now, interestingly, Morgan Stanley has come out with this report maintaining underweight rating, and the target price is set as 2,950 rupees. Also, they have stated that the revision in the transaction fees is actually going to comply with SEBI's true to label norms. Now, to put it in perspective, the transaction fees for the futures contract has now been fixed at rupees 2.1 rupees for almost, you could say, 1 lakh of a turnover coming in, and also for options contract it has also come down at almost 41.8 rupees at a flat rate. Now, the per unit transaction fees for MCX will accordingly be higher, almost 1.5% higher versus the first quarter numbers, which came in at almost 2 rupees when it comes to futures, and almost 41 rupees when it comes for options. To put it in a simplified perspective, the rise in the transaction fee would result in roughly 5% increase in the FY26 EPS numbers, and the broking house is believing that the large proprietary traders and high frequency traders, they will be particularly sensitive when it comes to the increase in the charges, as the bulk of volumes come from these accounts, and they need to see what the impact would be coming in on these trading volumes.
Okay, so it looks like the move could be capped today in MCX. Thanks very much, Sharad, for explaining as a rationale what Morgan Stanley spoke in their note on MCX. Well, that's a wrap on this edition of Market Cafe. More to come on the ET now. Don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.